Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest energy updates and digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to the Crypto Republic. Bringing you updates every day at 9, noon, and 7 p.m. Eastern Standard Time. And here at the Crypto Republic, we give you the bird's eye view, a satellite perspective to spot the big picture shifts while everyone else is stuck in the daily chaos. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. Well, ladies and gentlemen, something is happening right now, and most XRP holders still don't see it clearly. Not because the information isn't there, but because attention is being pulled in the wrong direction. Everyone is watching price. Everyone is waiting for confirmation. Everyone is asking, when will XRP move? But almost nobody's asking the question that actually matters. What happens the moment it does? Because history shows something most investors learn too late. The biggest opportunities don't reward reaction. They reward preparation. And the gap between those two, that's where outcomes are decided. So today, this isn't really about XRP moving. We're talking about what XRP holders need to have in place before the next phase begins. As always, ladies and gentlemen, I want to thank everyone that takes the time to like, subscribe, share, and comment. These few things really do help the channel very much. And if you're new here, our videos are broken into two pieces. In the beginning, we go over everything, and in the end, we have a rant that everyone has come to love. With that being said, let's dissect today's video. Let's zoom out for a second, because if you only look at XRP, you're going to miss the entire story. We're not just in another market cycle, ladies and gentlemen. We're in the middle of a financial system transition. Let that sink in. Not hype, not noise, structure. From analog to digital. From centralized to distributed. From manual to automated. And this kind of shift has happened before. Think about the early internet, late 90s, early 2000s. Most people thought it was slow, confusing, overhyped. But behind the scenes, infrastructure was being built quietly, ladies and gentlemen. Fiber networks, server architecture, protocol layers. And the people who understood that moment didn't just trade it, they positioned for it. But here's where it gets interesting, because the same pattern is happening again, just in a different form. The institutional shift. Today, it's not about websites. It's about value movement. Banks, institutions, regulators. They are no longer asking, does blockchain matter? They're asking, how do we integrate it into the system? You're seeing central banks exploring digital currencies, institutions testing tokenization, payment systems evolving. But here's the key difference between them and retail investors. They are not chasing price. They are building infrastructure because they understand something very simple: short-term noise and long-term structure. This is the retail blind spot. Now let's bring this back to you. Most XRP holders right now are focused on price targets, entry points, market timing, but almost nobody's focused on access, protection, transfer, structure. And that's a huge problem because crypto is not like traditional finance. There is no safety net, no customer support, no reset button. If access is lost, it's gone. And this is what most investors are missing, unfortunately. If you're the only person who understands your crypto setup, you are not secure. You are the single point of failure. This is the wealth blueprint. Now, this part surprised a lot of people because outside of crypto, some of the wealthiest families in the world have already solved this problem, not by focusing only on making money, but by building systems around it. Built massive wealth over time, but what separates them is not income, it's structure. Their system is simple but powerful. Quarterly family meetings, annual full breakdowns, full transparency, early asset transfer, ongoing financial education. They don't just build wealth. They build a system that ensures that wealth actually lasts. So here's security versus fragility. And this is where it starts to connect directly back to you, because most crypto investors are doing the opposite. Now compare that to the average crypto investor. Everything is hidden, isolated, understood by one person. That feels safe, but it's not. There's no structure. It's only access. No system, only control. Because real security is not secrecy. It's controlled access. Imagine this. Your XRP position grows significantly. We're talking life-changing. But something happens to you. and nobody knows where the assets are, how to access them, what steps to take. The wealth doesn't transfer, it disappears. Not because the market failed, but because the system didn't exist. The structure before the scale. And this is where institutions operate very differently. They don't wait for growth, they prepare for it. They build systems first, then scale into them. Retail does the opposite. They wait for higher prices, more certainty, confirmation. And by the time they act, flexibility is gone. And this is what investors never think about. Honestly, timing isn't just about buying. It's about structuring. This is so important. So when you look at cost basis and positioning, let's go deeper. If you accumulated XRP early, you are not just ahead in price. You are ahead in opportunity because early positioning allows strategic transfers, flexible structuring, potential tax efficiency. But waiting changes everything. Higher value will always equal fewer options. Here's the risk nobody talks about. Now here's the real twist. Crypto introduces a new category of risk, not market risk, control risk, because crypto is a bearer asset. Whoever has the keys controls the funds. No reversal, no authority. Now think about that for a second. Now think about relationships, shared access, lack of understanding. One mistake can't be undone. Building your system. So what should XRP holders actually do? Not hype, not predictions, preparation. Start simple. First, document your holdings. Map where everything is. Create secure access pathways. Educate one trusted person. Separate storage intelligently. You don't need complexity. You need clarity. The human factor. Because here's something history shows again and again. Wealth without preparation gets destroyed. But wealth with education, structure, guidance survives and grows. This is the biggest shift. Now zoom out again. If even a fraction of global finance moves on-chain, what happens to liquidity, settlement systems, cross-border payments? And where do assets like XRP fit into that? Because this is where it gets interesting and spicy, ladies and gentlemen. The opportunity is not just in price, it's in positioning. Why this moment matters. Right now, we are in a phase where regulation is forming, infrastructure is being tested, institutions are preparing. This is not the end. This is the setup phase. And historically, this is where positioning matters most. So if you hold XRP, here's the real takeaway. Not hype, not predictions, not timelines, preparation. Because short-term noise, long-term structure, price will move, but the system determines who keeps the outcome. Let me ask you something. If XRP moved tomorrow, are you actually ready? Are you? Are you just watching? And more importantly, if something happened to you, God forbid, would your system hold up? If you got value from this, hit that like button. Subscribe if you're serious about staying ahead of this shift. And drop a comment below. I would like to know, are you prepared or just positioned? Because the next phase of this market won't reward the loudest voices. It will reward the ones who built their systems before the move begins. Well, ladies and gentlemen, happy Saturday. I hope everyone's enjoying their weekend. We're watching the news right here. And as always, I want to thank everybody who takes the time out of their day to help educate themselves and help support the Wolfpack. I want to welcome all the new members of our Patreon, all the new members of the membership channel. A lot of people are going to get cut up like sushi. And if you're new here, please like and subscribe. The rant that begins right now picks up on yesterday's video. Having Gucci clarity and Gucci conviction is learned. Normally, you have a bad experience in the markets, and everybody remembers. You know, human psychology is so amazing. People will forget their greatest trade wins. People will forget their greatest market moves, but they can remember with absolute Gucci clarity when they lost a lot of money. They can remember like an elephant when this happened. That's why having conviction and clarity and that Gucci mentality is very important. As financial mercenaries, we have to go into financial combat every day. Every day we do this. We do this for a living. We risk our names. We risk everything That's why when I say we're the remora, we're swimming underneath the apex predators. If you look at the chaos that's being created right now from top down, for whatever reasons that you want to believe or understand it happened, it's creating life-changing scenarios for wealth to be acquired. It's changing the entire board. Just right now, if you look at this, Yemen's Houthis launch missile attack on Israel as war with Iran intensifies. Iran is charging a toll in yuan for oil sold through Strait of Hormuz as American ground troops prepare to enter. The Saudi pipeline that bypasses Hormuz hits 7 million barrel goal. Saudi Arabia's crucial east-west pipeline that circumvents the Strait of Hormuz is pumping oil at its full capacity of 7 million barrels a day. According to a person familiar with that matter, Saudi Arabia has rolled out the contingency plan to boost exports throughout the pipeline to the Red Sea, as the effect closure of the strait due to the Middle East conflict has choked off Gulf oil producers' main X route. So you got flotilla tankers have redirected to the port of Yanbu to collect the oil, providing an important lifeline for global supply. So crude exports via Yanbu have now reached 5 million barrels a day, and the kingdom is also exporting about 700,000, 900,000 barrels a day of oil products, according to the person familiar with the Saudi oil industry. So of the 7 million barrels that goes through the pipeline, 2 million are destined for Saudi refineries. Yanbu route only partially offsets the hit to the supply through Hormuz, though with about 15 million barrels a day, crude shipments pass through the war. But the bypass is one reason oil prices haven't reached the crisis levels of previous supply shocks again. So now you got the Houthis saying they're entering the war, they're shooting missiles. The concern for the oil markets will be the Red Sea becomes a new front. Again, still the Houthis had not given any indication they would attack tankers going through the Red Sea and Bab el-Mandeb Strait. At least for now, there's no sign of any action. Ladies and gentlemen, why we go over all this, right? And again, I was on the phone with one of the monster family offices we've worked with for over 2 decades out in Asia. And what we're discussing with them, and this is my own opinion, not financial advice, and we're telling everybody as well in the Patreon. Again, I want to welcome all the new members of the Crypto Republic Desk Monthly. I love chatting with everyone. And congratulations, I salute you to everybody that took the tips from the pits with oil who have already paid for their year subscription. It's really an uplifting view when you're able to take control of situations and benefit from this the same way that the elite top-down groups do. We believe that there could be a controlled takedown of the markets with the introduction of ground troops to take over 2 islands. I just went over 2 reasons of why, and long-term viewers of the Wolfpack here understand what we've been talking about every day. Again, so when we take this satellite view, this view down, I want you to understand something. This is so important. The tweets are moving the markets. People went into the weekend squaring off. That's why you see a lot of price movements happen. So if Iran is charging renminbi for a toll, it goes against the petrodollar. But we believe there's so many cracks in the markets right now, it's almost better to have a controlled demolition of the markets, that they can control the narratives, that they know when things are going to happen and why. Again, the optics are there, and it sets up a spectacular opportunity to capitalize off of the winds of chaos. Again, being the financial mercenary, all the things that we go over every day, we hope for the best but prepare for the worst with our financial accounts of why we do this. Again, it's a very uplifting thing. I want to point something out to you guys right now, and this is really important. Again, the United States could soon position more than 17,000 ground troops in and around the Middle East in a major military escalation like the ongoing conflict with Iran, according to the Wall Street Journal. So if approved by POTUS, the deployment would add around another 10,000 additional soldiers to forces already active in the region, signaling a possible shift towards expanded ground operations against Iranian targets. Ladies and gentlemen, one good tip from the pits can easily pay for your entire year subscription. If you want the deeper macro research and learn how to take advantage of all of this, come and join over 450 active traders and investors in our Patreon, the Crypto Republic Desk Monthly, and join the community. Welcome all the new members. Doesn't matter if you're brand new or experienced. There's a lot to take advantage of all the discussions that we talk about. It's really, really, it's unbelievable. But with all this happening, the markets are waiting for something like this. I want you to understand, again, there's going to be downstream ways to take advantage of this. But right now, when you look at the crypto markets, that's a risk on asset. We believe the pressure's to the downside, and we believe when the fireworks happen, and if goes where we believe it's going to go, when the sparks begin to fly, there will be bottoms in place that will be the greatest discounts that we believe in a long time and in these cycles. So for people who want to DCA and take advantage of, or people who felt like they missed the boat, this might be one of the greatest opportunities left to have that, not financial advice. Because, ladies and gentlemen, let me give you another perspective again, and understand this is why I tell you position size has to be small, has to be able to be cut up, carried. Trading is an occupation, it's a profession. We have to do this every day. It's not how much you have in the market, it's how long you've been in the market. So if you're playing, like I tell you, week to week, and you start out the week on when they blow the whistle on Monday, by Friday, people are getting out and harvesting their alpha. Because few people understand that silver is the new oil. A tsunami of demands is coming from countries that need a backup plan for their energy needs. The conflict has created this and much more. Again, oil chokehold. Ladies and gentlemen, 20 million barrels a day have vanished. It's forcing a historic shock measured in gigawatts and silver ounces. With the war with Iran wipes out 20 million barrels a day. Okay, so the choke Hormuz kill of the Gulf, the output is being killed, and the refineries necessitating a frantic pivot from oil to silver-hungry solar power. Stay with me again. Imagine the world abruptly choked off 20 million barrels of oil per day, with tankers halted and refineries starved, forcing nations into a desperate scramble for replacement energy. In this mental exercise, we first translate oil into pure energy terms. Each barrel holds roughly 1,700 kWh of thermal energy, and one GW power plant running flat out for a month produces around 720 million kWh, which works out to roughly 424,000 barrels of oil per month for 1 GW of output. It's massive. 1 GW solar farming operating at a full 100% capacity factor would deliver the same 720 million kWh or so on a rough physics basis. 1 gigawatt is 1 gigawatt, whether it comes from oil or sunlight. Then we bring in silver into the equation. Assuming 1 GW of solar capacity requires about 700,000 ounces of silver, with 1 barrel of oil equal to about 1,628 to 1,700 kWh. 20 million barrels per day represents around 32.6 billion kWh daily, which corresponds to roughly 19 GW of continuous power that must be replaced if silver-powered solar becomes the new oil. So if you multiply that by 19 GW by 700,000 ounces per GW yields on the order of 13 to 14 million ounces of silver per day in a new solar capacity implied by the scenario. Ladies and gentlemen, you're going to have to rewind that and write that down. Write that down. I can't believe we give these things away for free. It's so crazy. This is a simplified ramp-up illustration of what I just said. It's not a literal forecast. So in English, once enough solar capacity is installed, additional silver demand will fall because panels keep producing for decades, and new ounces are only needed for incremental growth, not 13.5 million ounces every day. So, ladies and gentlemen, global energy markets have been thrown into chaos by the war against Iran, instantly turning a chronic tight market into acute system shock, supply shock worldwide. The effective closure of the Strait of Hormuz has choked off one of the world's primary energy arteries, stranding tankers and serving flows to Asia and Europe. Saudi Aramco and other GCC producers halting or slashing output have removed the only realistic swing capacity, destroying the market's safety valve. In the U.S., Australia, and Europe, years of refinery closures and green wave of hydrocarbon policies have gutted downstream capacity. It's so crazy. So just as demand for refined products spike, this mirrors the political assault on farming over methane. Ideological overrides physical reality, leaving societies exposed to fuel shortages, price explosions, and industrial shutdowns and potential unrest. So now do you understand why we promote certain ideas and Gucci clarity, why we promote different ways so that you do not get cut up like sushi? Understand what we just said, and if you write that down, why we're taking advantage of what's happening worldwide right now, because the shift is happening in so many commodity markets, so many equity markets, so many things. So there's trading opportunities, there's investing opportunities. This is the generational opportunity of our lifetime. We will look back on this in 10 and 20 years, sitting on a porch in a rocking chair. I'll be overlooking the water somewhere because I find tranquility in nature. Again, I love the concessions that we run, and I love nature. I love farming. I love all this stuff, and I love everybody here. If you're here, I salute you. How about giving us a like and telling us, is this your first time being here? But let me just tell you something. The disruptions that are happening are creating new markets. This silver factoid we just went over, you go over and you listen to this again and you write it down. That's why China was always so huge in this space because they have no domestic reserves for crude whatsoever. So, you got to understand that that's very, very big. That's why when you look at the future, you can see what's happening right now. Again, tweets move markets. And ladies and gentlemen, I say this over and over again. One good tip from the pits can easily pay for your entire year subscription. If you want the deeper macro research to learn how to take advantage of all this, come and join over 450 active traders investors in the Patreon, the Crypto Republic Desk Monthly. And again, see how we're going to take advantage of all this. It's not so hard. What's happening in the world is very sad. It is. But you know what? To not prosper from it is rough. So let me be very clear with you right now. What we're witnessing in global markets is not noise. It's not volatility. It's not a temporary repricing. It's the early stage fracture of a system that has been held together by liquidity, leverage, blind confidence for over a decade. And the most dangerous part, markets still pricing this like it's nothing wrong. This is the signal everyone's ignoring, ladies and gentlemen. Let's start with something almost nobody's talking about, but should be. Turkey just sold 22 tons of gold in a single week. This is not portfolio rebalancing. This is not tactical allocation. This is 100% distress. Gold is the asset you hold when everything else breaks. It's what central banks use when they have no other option. So when a central bank, especially one that is structurally dependent on energy imports, starts liquidating gold at this pace, it means the pressure is already here. It's not coming, not building. It's here. And if you've been through enough cycles, you recognize this pattern immediately. We saw it in 2008, we saw it in 2022, and every single time it didn't stay contained. It spread. So if you look at the oil shock, the feedback loop, let's zoom out for a second. Because what's happening here is part of a much larger mechanism that most investors completely misunderstand. In 2022, when oil prices surged, something very specific happened. $435 billion in U.S. treasuries were liquidated by Asia. $164 billion sold by European economies, over $1.3 trillion in global equity outflows. Why? Because countries needed dollars to buy energy. And how do you get dollars? You sell assets, treasuries, equities, reserves. That selling pushes yields higher. Higher yields strengthen the dollar. A stronger dollar makes oil more expensive in local currencies. Never forget that. That's very important. Write that down. Which forces more selling. This is a self-reinforcing loop. And right now, the loop is starting again. Oil volatility is back. Reserve stress is visible. Central banks are already reacting, but markets, they're acting like the mechanism doesn't exist. Here's the illusion of stability. Let's talk about the credit markets, because this is where the real complacency lives. High yield spreads barely moved. They've widened slightly, but they're still sitting near levels that historically precede massive blowouts. This is what we're paying attention. Meanwhile, something far from important is happening under the surface. Investment-grade credit is underperforming high yield on a duration-adjusted basis. Write that down. It's so important. That should not happen in a healthy system. It never does. That tells you something very specific. This is not about default risk yet. This is about interest rate risk. This is about duration. This is about the fact that the entire system was built on the assumption that rates would stay low forever. And now that assumption is breaking. Here's the time bomb in private credit, ladies and gentlemen. Let's go one layer deeper. Private credit. Private credit. This is one of the most underappreciated risks in the entire financial system right now. We're talking about a market that has grown to rival traditional banking. And what is that exposure concentrated? Software, technology, growth-dependent companies. These businesses rely on cheap capital, stable growth, predictable refinancing conditions. Now imagine what happens when refinancing costs jump 150 to 250 basis points. Margins compress, cash flows, convenience gets breached, and suddenly what looked like stable yield becomes forced selling. That's how you get a cascade, not gradual all at once. This is the lag that traps investors. Here's where most investors really do get trapped and chopped up like sushi. They say earnings are still strong, defaults are still low, the economy looks fine. Of course it does, because credit always lags. But by the time earnings roll over, markets are already deep into the drawdown. This happens every cycle, and it's happening again. So this is the $10 trillion problem. Let's talk about the elephant in the room. The United States has to refinance $10 trillion of debt the next 12 months. At current yields, that locks in roughly $450 billion in additional annual interest expenses. Again, that's not stimulus, that's not growth, that's pure drag. And when you combine that with a projected $1.9 trillion fiscal deficit, you get a system that has no flexibility left, no buffer, no margin for error. So the inevitable outcome, let's put this all together. Central banks are selling reserves, oil-driven liquidity stress is reemerging, credit markets are mispricing, duration risk, private credit is structurally fragile. The U.S. is locking in massive interest costs. There is only one way this gets resolved. When the system tightens too much, when growth slows, when markets break, policy responds, liquidity returns, balance sheets expand. Not because they want to, because they have to. So what happens next? Before that happens, though, you get the reset. You get the 15 to 20% equity drawdown. You get yields pushing higher towards 4.6, maybe even 4.7, my God. You get forced selling. You get position unwinds. You get panic. And that is where opportunity is created. This is not a normal cycle, ladies and gentlemen. It's not. This is not a soft landing setup. This is a transition from a world defined by cheap money, stable inflation, endless liquidity, to one defined by volatility, scarcity, and policy constraint. And in that world, the winners are not the ones chasing momentum. They're the ones who understand where liquidity breaks, where stress emerges, where the system is forced to respond. Because at the end of this cycle, real assets win. Liquidity wins. Preparation wins. And everyone else, they learn the hard way. The markets don't wait for consensus to catch up. Ladies and gentlemen, XRP, ICP, HBAR are the anointed coins. Why I say to us, in our opinion, the anointed coins. If you look at the structure of the coins and what they do and where the world is going, you don't really need to ask any more questions after that. You don't, because the use cases go on and on and on. We went over yesterday about how you can use your crypto now for a down payment for the mortgage brokers in the group. To them, ask them about even it's massive. And why I say that, ask them about it even in the comments, because you can see how access to people's crypto holdings are making their way now into everyday life. It's huge. It's so huge. So we look at the transformation of everyday life for what crypto can do. Again, we also look at the trading situations that we're able to take advantage of because of the chaos that's created. Ladies and gentlemen, being a financial mercenary, we have to pay attention to all of these things. When you've been paying attention to this as long as I have, it's an ongoing soap opera. It's no different than watching, I guess, everyone who likes watching sports, the team player, the stats, who gets traded and why, everything like that. But for me, I pay attention to finance, geopolitical situations, geoeconomic warfare. That's what I pay attention to. I love the opportunities that we are seeing right now, because everyone wants to talk about market manipulation. I believe market manipulation happens very, very much so. I remember, certain FX platforms used to have slippage, and anyone who's a hardcore FX trader, understands that. I remember have arguments in our first hedge fund about when spot Forex trading, you didn't need any licenses and you could send money overseas anyway. You didn't have to worry about that. But there was slippage because you had book A and book B. Book A, trader puts his money in, 90% of them gets cut up like sushi. They get crushed. They put a million in them on Monday. They're crushed by Friday. The market maker makes the $1 million. Then you got book B. Trader puts in the money, 7% that make the money. They sub out the trades. Every time he buys, they offset it to another market maker to do that, right? The world has changed. So what I believe is things are manipulated in some fashion. Again, it's not financial advice. It's just what I believe. You win through this scenario by patience, by having part of your trading plan that makes sense to you, that is for taking advantage of price swings. You have part of your trading plan and wealth plan that you write out, your recce, that is for accumulation, okay? That's for retirement. You have a plan about what you're doing and why. You force save money right away. The first thing that you do when you get paid, you force save money. So you don't have to sit there. You reward yourself by putting money into your trading accounts and whatever it is for your future. That's your reward. Again, and you keep powder dry for this, because make no mistake about it, things are happening. And as far as we're concerned, being able to take advantage of this, and again, one good tip from the pits can easily pay for your entire year's subscription. If you want the deeper macro research and learn how to take advantage of this, come join over 450 active traders, investors in the Patreon, the Crypto Republic Desk Monthly. And welcome to all the new members, because people are taking control of their own financial destiny. And I love showing people what we know and how to take advantage of it and why. I mean, there's so many things going on right now that this problem's not going away anytime soon. The downstream situations, we went over helium, what you need, all the things, all the disruptions. There's a financial product, there's a disruption. That financial product that experiences disruptions has further downstream products and uses and things that are relying on it that are going to have to go higher, whether it's in an equity base, whether it's any form of disruption, because globalization will lead to situations creating alpha. But ladies and gentlemen, I love you all. I'll see you on the front lines. I don't like personally to trade ever crypto over the weekends. That's not for me. This content is for informational and entertainment purposes only. It should not be taken as financial advice. Always do your own research and consult some financial advice before making any investment decisions. Always remember the game is changing, and those who understand it first will make and benefit the most. Make sure you're on the right side of it. You have two choices. You can be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves to never let it happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally. Because some moments in history are loud, but the ones that change everything are quiet right up until the moment they're not. And this is one of those moments. Do not blink because the world is distracting you with noise, while XRP continues to develop behind the scenes and building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. This is just the beginning. This opened your eyes? Smash that like button. Ring that bell and leave a comment with your thoughts. Turn on notifications and most importantly, subscribe to Crypto Public. We break down the major global banking trends shaping digital assets today, giving you context, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, stay in the public. Love you all. See you in the front lines.